let's keep going. We have one more panel to go about investing universe, and who better to lead this panel than Māris Vainovskis, senior partner for Eversheds, Sutherland, Bitāns. The floor is yours. Good to see you.
Good to see you. You're doing a great job today.
Thank you.
As always, Mr. Bond. Greetings, greetings. How do you like the conference so far? Yeah? The networking, is it good? Have you found at least one new contact? Okay, that's great, because in the previous conferences, you have the feeling you know almost everybody. But today, almost 1/3 of the attendees are new. And that is a great development for this conference. And the food is great, isn't it? So it's, yeah. When listening to the presentations, we have seen policy view, we have seen the view on equities, the fixed income bonds, and now the banker's view. But I was just sitting there and thinking, now what it is all about, and what is the value? What is the value of the shares, of the instruments? And it clicked that actually there is only such a market value to your shares, to your other financial instruments, so far as somebody is willing to buy them for a fixed price, isn't it? Just think about it. And therefore, we will have a very worthwhile panel to complete this conference from a panel of great experts, but they have also big wallets. Yeah, they are the buyers. They cannot be just optimistic, as I usually am about the capital markets. They need to be realists. They need to be sometimes pessimists. They need to be careful, because it is the investors' money that they are looking after, and usually they have also their own skin in the game. And that's a tough job. Therefore, I will start inviting on the stage my great panelists. And the first one, he's an expert of over many years of experience, but he manages a little bit over than $1 billion of investments. And he comes from an established outfit. And please welcome Endriko Vorklaev on the stage with applause. Endriko is from ECB Bank, Estonia. Welcome. The other participant, he collects accolades and prizes right and left. He manages, Endriko, more than 4 billion. And indirectly, many more billions. When he and other panelists are networking at this conference, they are surrounded by groups of people, because they are some of the greatest investors here. And the next panelist, he also, well, his fund owns almost half of Riga's prime real estates, from the largest Rimi to Galleria Riga, a prime real estate near the airport of Riga, and also this new place near Daile, you know, Kimmel quarters for hipsters, knows also that one. Welcome on the screen, Peter Elam Håkansson. Peter, welcome.
Thank you.
Chairman and Group Chief Investment Officer.
That's right.
East Capital.
Thank you.
Please take a seat. The next speaker, he has also over 15 years of investment experience. He is from an outfit which is one of those movers and shakers in Lithuanian market. Welcome on the screen, Regimantas Valentonis. Welcome on the stage, Regimantas. Artea Asset Management, Chief Investment Officer. And last but not least, a person about whose fund you are talking in during the coffee breaks. There is something new cooking in the market. He has accumulated 49 million to be invested in equities and also in fixed income instruments. Let's discuss what it is all about. Welcome on the stage, Rokas Žemaitis. Rokas, you are fund partner.
Yes.
First Asset Management.
Nice.
Please take a seat. So, the big wallet panel. We have discussed, we have heard a lot during today about this, the markets where we currently are. The frontier, the emerging. Now, what is your take as seasoned investors? Where we currently are in terms of the frontier market? Is it getting more mature? Peter, you have years and years of experience.
Mm-hmm.
What is your take where we are at the moment?
Well, I mean, if you look at the development of the economies, you clearly are more emerging than frontier. But we all know that the index providers, which are behind this definition, they look at the development of the capital markets, and they look a lot at liquidity, and that's kind of the Achilles heel of the equation. So you're at frontier market status when it comes to the development of the capital markets. I mean, from our point of view, we have a frontier fund, and we have a emerging market fund, and we have something we call the New Europe fund, and both the New Europe and the frontier fund can invest in the Baltics at the moment. And it's not always good to go to the next stage, because you will be so small in the next stage. So that's always kind of the big trick. Do you want to be a bigger player of a smaller pond, or do you want to be a small player in the much bigger sea?
Yeah. And Peter, how your own investment experiences have basically shaped the way you look at the market, at the investments? Have there been just the bright days? Have there been also some setbacks along the road which explain where we are now?
There's been many setbacks on the way. We started East Capital back in 1997. I started to invest myself in the Baltics already in 1994. The first meeting with Rein Lochmus and helping him to raise the first equity for Hansa Bank back in those days. And of course, there's been many ups and downs over the years. At the moment, we see some hesitation from especially international investors on the Baltic states and the proximity to the big neighbor in the east. And we also seen some development on the interest rate side, which has been a bit difficult as well for the real estate investments. But I think it's a bit to wait and see at the moment.
Yeah. Endriko, you are sitting right there. And there is always this is a Baltic Capital Markets Conference. And there is always this Estonian, Lithuanian, Latvian thing. What is your take? Because Estonia, was known and maybe is known as the absolute leader in the Baltic capital markets. Now, do you concede that position to the Lithuanians here? And where do you see Latvia? Because you both have had also some setbacks. Enefit Green, yes, gone. Ignitis. So maybe Latvia is now the emerging champion. What do you think on a comparative perspective?
So I'm generous. I can give this first place clearly to Lithuania at this moment. The market is most vibrant. I can easily give the credit as I work in Baltic team myself. Every day I interact with my Latvian, Lithuanian colleagues. So yes, we are a bit like getting behind, but that adds maybe some further motivation us to get our act together.
And Lithuanian, do you accept the first prize?
Actually, I would comment and give applause back to Estonia and maybe Latvia to some extent. Sorry, I think in the 5 years we didn't have any IPO in Lithuania. The last one was of Ignitis, so clearly there is somewhere Lithuania is third. Then, as was discussed today as well, I think in fixed income market, we've been dominated by real estate bonds, which will not be a focus of this fund. So maybe that's why I'm looking at Latvia, where we have quite a few issuers. We had them, most of, I think, companies today in the issue room were Latvians. And so yeah, there are also lessons to be taken for Lithuania there. Because, I mean, in general, we are in very good position when it comes to economy. We're in very nice position when it comes to capital raising. We saw unprecedented raise by ENVL. We ourselves were very lucky and did a good job in raising this fund and other funds in One Asset Management. But I mean, I want to see more action in capital markets, that's for sure.
And Regimantas, what is your take on the current situation?
So yeah, so in comparison for the last 5 or 10 years, I think we are moving in the right direction. Of course, not perfect in all the areas, especially, for example, in public markets, there is probably more who is gone and then new ones who came in the market. But for example, in fixed income, if it's small steps, but the interest rate environment help to get more smaller companies and also mid-sized companies in the market and try to raise a capital here. And private markets also, some instruments, it's private equity, it's private debt also doing some new issues, new asset management, new companies who are raising capital is coming. So the market developed at itself, but maybe it's not as a pace as here all the people sitting and would like to see, or would like to see at stronger pace comparing what's happening, but at least in a good shape is doing. And also we see more and more supporters, if it's from private companies, even from public institutions as well. We are trying to somehow to get the angle and to push this market. Of course, it's still a long way to go, but on a good trend and good pace. Maybe slow pace, but at good direction.
So thank you for the reflection. That was like the current situation. Now we need to focus on the opportunities and the approach. Rokas, so yes, about that fund. I saw it coming already 5 years ago. We're very excited to have the opportunity to act on an EBRD project, basically for a review of this CEMDEF, which was Capital Markets Development Accelerator Fund. And now Rokas is sitting here, thanks to, I would say, also thanks to our policymakers, but thanks to our development banks, thanks to Altum, you are in the room, thanks to ILTE, putting together this possibility. And then comes Rokas and his team, and they're winning the tender for the fund manager. Can you tell the audience a little bit more about this opportunity, what you are looking at? Was I right that you have 49 million? And what is your outlook?
Yes, Māris. Yeah, so I'll also use the opportunity to say big thanks to ILTA, Altum, our private investors. I first was introduced to this initiative like a year ago when there was an open call. And my excitement grew ever since. Of course, I saw it a bit in the beginning maybe as a challenge. But when you are thinking every day about it more and more, it gets you, I'm becoming more optimistic about it. So yes, we have just, not even a month ago, we closed, did the first closing of 49.5 million. So yes, our main anchor investors are ILTE and Altum. And it's very, very nice cross-border initiative. Just how teaming up in the Baltics, we could do more. I would definitely like to use the opportunity to invite SmartCap and Estonians to join the initiative because we are open to second closing. About the fund, so we will provide growth financing. What separates us, I think, we are a founders-friendly investor. We come to minority. We support the founders who want to grow, to scale the business, and who has the intention and clear intention to go public. Because our idea is that when discussing with the potential target companies, that there would be clear roadmap to public markets, whether through IPO or in debt cases through bond offerings.
And what is the split that you're looking at, let's say, IPOs on equities and bonds?
Our mandate suggests up to 40% can be invested into bonds, but we believe currently our strategy suggests that still primarily we would look into equities up to 80%. So, of course, we can recycle bond.
Equities 80%?
Yes.
That's powerful. There are probably some companies sitting there and now hearing this. No, you might be their anchor investor.
We might, for sure. We say our tickets from the fund are these are, at the current stage from 2 to 7 million euros, but we provide up to 50% of the equity needed. So we can lead rounds up to 20 million. And we invite all SMEs, small and innovative mid-caps to consider us. We are generalists, but what can probably from some of the funds, what stands us out, we can do financial sector. We saw that there's for most of the financial companies, the equity is a consideration. But yeah, all other entrepreneurs who believe that they can scale the business. Of course, we're looking also to return. We have return requirements. I'm not going to disclose, but we are looking for success stories. And IPO is an opportunity. I would just like to also emphasize that it shouldn't be the end goal to the company, but because we saw, we heard today and we saw quite a few cases when there's then case study later that about repricing, about maybe a so it should be a balanced approach, but it can open a lot of doors for the companies, even for family-owned companies who think about generations and maybe can get some access to public equity but stay in control.
Sounds promising. And Endriko, would you consider investing in one of those bright success stories before they actually are proven success stories found by Rokas here?
We are investors in several private equity funds already, and just lately we joined, for example, in Valda's new Pan-Baltic fund. So I would put this pre-IPO fund in a way on the line of those buyout and other private equity funds. We are not specifically targeting maybe this pre-IPO segment, and also giving some context that our mandate is global, of course, and my fiduciary duty towards clients is not exactly developing the local capital market, but it's still performance from the global mandate. But that said, we still hold circa 10% allocation to local markets. If we combine all SEB asset management units in Baltics, we have some over 700 million euros local investments here, including mostly like private assets. And therefore, this pre-IPO could be definitely one candidate, but it should be analyzed besides other private opportunities.
Right, and what is approximate investment, let's say, in the Baltic markets and abroad of your portfolio?
If we go to, for example, local bonds, local commitments to private funds, the tickets from Estonia, from SEB funds alone are in tune of maybe 5 to 10 million euros. But if we combine maybe our Baltic entities and we all go, maybe the ticket could be 30 to 50 million Baltics combined to one such an opportunity. But that doesn't say that we always move in sync, and if, for example, Lithuanians go to some opportunity, we will join that. Not necessarily. We work together. We have local presence, which is advantage. So if we have some Lithuanian question, I turn to my Lithuanian colleagues to ask about that opportunity, and I will probably ask about that 1 a.m. opportunity from them as well.
And Peter, how about you? You're a very successful investor, and probably you're not buying the assets at the highest valuation, right? Because the value, I want now to grill you gentlemen a little bit, let's say more tougher topics. So valuation and IPO. A few clients also coming to me, and we are very active in the markets, and their expectations sometimes of the company value are on the high side. But in order to have you as investor, what would be your view, your advice, and your kind of careful assessment of the investment opportunity about those companies that we are currently talking about, so the first time IPOs? And would you consider at all?
Well, as I said, I think it's a bit of a wait and see situation for many investors at the moment, which for me, it's a good opportunity then to buy, because if people are hesitating a bit, normally prices are a bit lower, which is always good. We are not investing ourselves in pre-IPO situations, meaning that we have to wait for the IPOs, because we only invest in listed equities. For us, when we talk about to companies that are about to go public, I think the advice all the time is to think this is a long-term race. You have to think about not maximizing maybe your own value for day one, but you have to think about this. You want to be listed, you want to be on the stock market for many years ahead of you. The capital market have a long memory. If you kind of burn the investors with a too high valuation and the share price goes down afterwards, after the IPO, it's not good. It's better to actually build some kind of momentum and a good development, and then you can use the stock market for its main purpose, i.e. being a source of capital, risk-willing capital. So think long term, pick good advisors.
That's good advice, because to have a good IPO, and I think also Regimantas, some of your clients are approaching you could be quite pushy. So what would you advise in terms of the valuation and a possible discount, so that Peter there is interested to enter this stock position? Or should we aim to sell as high as possible and see what happens?
So, you know, it's both ways case. So somebody wants to sell at a higher price and somebody wants to buy at a lower price. And if it's match, so it's a market price for that one. So probably from both sides, and from book runners who are doing this IPO, launching investment proposal, we also understand another part who will buy and do not offer that at crazy valuations, especially in Baltics, where it's probably in IPOs the companies comes in more matured stage, comparing with well-known worldwide names as in Nasdaq, etc. Where it might be in some cases not relative to us. So at this stage, answering your question, if it should be discount offered for the IPOs or launching proposal, so I doubt, because you know, it's you from the seller's point, you value your company at also reasonable price if you want to sell some part or even bigger part to other investors. So that is probably always it's demand supply question, and midpoint is a market price.
Yeah. And Rokas, just to complete this circle on what would be your 2 or maybe up to 3 very specific punchy points of advice to the potential issuers there for them to be a successful candidate for your cornerstone investment?
Think about a long-term play. So in terms of financials, so if you are preparing for an investment, this should be like clean, like EBITDA should be, I would say, you know, clean, recurring. We should understand the equity story.
So cash flow is one of the kings.
Cash flow is one of the kings. The governance. So you know, we should have a clear board. You know, IFRS reporting would be very good. And in general, like the governance structure should be clear, and legal structure would also point that it should be clear and understandable. It should be no hidden gems to be found from that perspective. If you, maybe I'm thinking if your question was, I would pitch my fund, if from that sense, so if that was, so then I would say that, as I mentioned, we are founders friendly. We're local, accessible. We're not a satellite from somewhere abroad. So, yeah, and you know, we are minority investors who would support you with the same. If we invest in pre-IPO stage, so we definitely are going to support you on the governance aspect, also through our network access. I would like also to mention that this is a joint partnership between One Asset Management and our Latvian colleagues, Baltic partners. And One Asset Management is managing almost $500 million in different niche asset classes and been in the business for many years. Baltic Partners is a prominent M&A advisor regional, and knows Valeria and Dimitri, they know Latvian market very well. So it's a very good match and combo, and we can also support with our network access. We have we have a vehicle in Luxembourg. We have you know, connections in all over the Nordics and here local in the Baltics. So
So
this is my pitch for you.
to have contacts of these gentlemen here, and also of your good partner Dmitry from the partners.
Yes.
Now,
if I could add here,
yes.
maybe regarding if you are talking about the development of capital markets in Baltics, I would say that growth story should be present more, attract investors here. And we are always talking about government-owned companies, enterprises to launch to IPO here in Baltics. But I think private companies would do better way here to develop capital markets, especially what we do have in Baltic some unicorns as well, which probably a growth story will attract more, and it's like not only local names, but we are global names as well. So here, this angle might help to develop market much more comparing with just pushing government-owned companies to listed shares.
So Regimantas is asking a question to you, basically, Endriko. Where are those Estonian unicorns? Where are they on the stock exchange? But you also mentioned these state and publicly listed companies. So my quick question to you is actually there are two that are public. That's public information. So in Latvia, that's Latvian Roads Management Company, state-controlled, and the other is Riga City House Management Company, both looking for IPOs. Of course, politicians willing, but they are clearly on track. Would you have any restrictions in terms of your investment policy, in terms of your general, even let's say any shareholders' instructions to invest in those companies in Latvia, state and municipality controlled?
No, we are rather flexible on that. We recently, for example, invested also to those Lithuanian VIK defense bonds, and but now those candidates you mentioned, aren't they a bit like boring, like as a new IPO?
Boring.
I mean that.
But boring is good, isn't it? Sometimes.
Should we rather look for the new candidates from the I don't know, private equity funds or venture capital funds even, as you said previously already, that would attract more traction also from the retail segment, also from young investors. So maybe we are trying to find the new candidate, the new like a state entity to be privatized, but maybe we should look for the growth stories elsewhere.
Yeah. And Peter, you have worked for SEB Bank for how many? More than
10 years.
10-ish, yes. Now you work for, of course, East Capital. Now, is there any difference in terms of investment policy, in terms of the local market focus, and are there any comments in that respect? You working for a bank or now this huge investment fund?
I mean, it's so long time ago since I worked at SEB, so it's almost 30 years ago, but I can only say that it was a fantastic experience, and I learned a lot, which I've been trying to take advantage and use at East Capital. So we learned a lot from SEB over the years. So and we also work a lot with SEB. They are our main custodian, so we see them every day.
Okay, just good words. Peter, whilst you are here on this topic, let's now discuss this. We have heard that in Latvia there are about 12 billion of residence deposits. In Lithuania, a ballpark of 27. Wow. And Peter, based on your experience, what is your guidance? How can we energize that capital? Is there room still for more investment funds? Is there needs to be more offerings? Is it just the financial literacy? What is the problem?
I think there are many different things, and again, if we should look at Sweden as an example, which has a thriving capital market, one thing is to make it very easy to invest with this, how we say, account where you don't really pay any taxes until you pay a nominal tax every year, a bit like what has been introduced in Lithuania. That's one thing. The other thing is to think about, you seem to have a lot of money on the accounts, but people are not really maybe daring to go into other sources of investment. So you need to do more education, that is clear. I think even though they might be boring, these state-owned companies, you need to lead the way maybe to say that even if the government is privatizing, so it's a solid signal. That's one thing. I think you need to convince these unicorns also to list locally, because it's fun. People know about Bolt, they know about Vinted, they know about these strong brand names. And if we're also thinking about real estate, which is a sector which is very close to me, and we are about to launch our 5th real estate fund, I think you also should think about, why do people buy bonds rather than real estate? Because real estate is a similar type of return profile that you actually get paid a rent every month. So maybe you should think about real estate funds that pay a dividend every month or something like that, to create a cash flow for people. So it's a more kind of bond-like investment, or more like a cash account investment.
Peter, is real estate still the king of the asset classes, in your opinion?
Indeed.
It is?
Yeah.
And
Indeed.
what is your reflection? It was mentioned on the previous panels that there will be an oversupply on, let's say, those fixed duration funds exiting now. What will happen, in your opinion?
There might be good buying opportunities.
You might be buying a few of those.
And since we are launching a new fund, I'm clear that we think it's a good buying opportunity. No, but I think it's a bit sad with this, when you have these pension reforms that have been implemented, and we are now in Lithuania, and it happened in Estonia. We are backtracking a bit on that and letting people leave, because it means that these structures that real estate need to be part of, you cannot trust them as much as before, because you need to be able to trust long-term capital to be a long-term investor in real estate. So I think we need to think about how to make it, how we say, foreseeable and predictable.
And Endriko, is there still a room for new funds in the market? Real estate, bonds, maybe multi-class?
In bonds, I think there is more room. We don't have many such fixed income focused local investors, and that could facilitate the development of the capital markets as well. And we, as a pension portfolio managers, also outsource the management to other funds frequently, so that could include some local bond funds. Why not as well? And there are some existing already today. But you know, the legislation between Baltics is rather different. In Estonia, we are very liberal. We can buy up to 100% of the issue. It can be non-listed, non-rated, but our Latvian, Lithuanian colleagues face very many barriers there, and I would encourage the regulators also in Latvia and Lithuania to ease that a bit, so that we could access also wider universe.
Okay, and you heard that the Baltic residents are reasonably cash rich. Now, has that been what this, let's touch this topic of this. I really liked your minister's comment. He was sitting in the chair where you are sitting, and he said that that was one of the stupidest mistakes that your country has performed. Now, what happened? You see. So, what happened in Estonia as a result of this second pillar of the pension reform? was the money returning to the markets, or it was just sitting on the accounts, or maybe there are more TV sets, refrigerators, and washing machines business going
Yeah,
well?
the statistics is a bit maybe conflicting, but for sure more than a half of that withdrawn money sat on the current accounts 1 year after the withdrawal. So it just sat, lost its money, its value due to inflation. Yeah, some was spent on refrigerators and TV sets as well, but I wouldn't exaggerate that either. The point is that this money didn't start investing, meaning that those people who were investors before, they rather stayed in the second pillar system. And those who left actually were not investors and didn't become investors either. So it amplified those differences even further. But now, yeah, we are already in AUM levels above the pre-reform stance. So, yeah, I would encourage Lithuanians to cheer up as well in face of that.
Regimantas, do you accept this encouragement? What is your view of the pension reform?
So we have an example, Estonian example, so probably we will follow the same percentage point. Hope that at least with investment returning to the market, or at least people who will take the money from the second pillar will do by themselves, investing in whatever, it's in Baltics or in global funds, etc. So let's hope at that projection, but let's see. So
do you recommend our policymakers to do the same? I heard our minister, and I was happy hearing he said, thanks to God and politicians, we will not do that in Latvia. But I know for sure that more than half a year ago, it was definitely on the agenda. So, Regimantas, your recommendation to our policymakers?
So the outcome probably the same, because the as example of Estonian showed that people who took their money from the pension funds, they put their money in cash account, in bank account, and that's it. We didn't do anything else over here. So that's losing the value, especially from 2021, 2022, when the market was on positive trend, etc. So the probability what will happen the same in Lithuania is huge, high. So the same it might be in Latvia as well. So if it's happen in two countries, so do not do the same mistake in the third one.
You hear, dear colleagues, wise advice. And Rokas, yeah, let's.
No, maybe two things. One thing, there will be a winner in this pension reform, and it will be our electronics retailers who are struggling a bit now. But if being more serious, I would say that 90% of the people, including myself, should be forced to invest and save, because it's it requires discipline. It should be automated, and it should go. You need to do portfolio rebalancing. You need to look. So pension fund managers are doing a good job. And the outcome that was commented today by politicians, that it adds you like 50 euros to the pension or something. So okay, it's 10%, and you invest like what, 1 or 2% of your salary. What would it be if you didn't have this pension? So probably you would consume it. So it's all the researchers suggest it's very it requires high discipline. So, and you have to have many pockets, and pension pillars, second, third, are those pockets where it should be for, I suppose, everyone. If it's very low income, still to some extent you should think about it.
Yeah. So thank you for this advice. And we should finish with the outlook. And I want you, and I want every one of you to now face that we are sitting here in this conference. It's written 2030. 5 years from now, and this is the same panel, and you're the same audience, and I would like to start with you, Peter. So what has happened? What topics are we discussing in 2030? What is your dream and your outlook?
I hope that we're talking about a very vibrant stock market where you have lots of entrepreneurs that have been listed with their unicorns and smaller companies, and that you see a broad knowledge of the stock markets with continued high participation by retail, but on a bigger market. And I also hope that you have a very vibrant real estate market where you see lots of players as well in the commercial side.
And Regimantas, what problems we are solving in 5 years from now?
I hope there will be no problems at that time. But,
it will be like heaven, yes?
Yeah,
No?
but in reality, probably we will discuss the same question, how to push the capital market forward going on, because it's not stopping, it's always developing, and maybe some new angles might be in the market. For example, listed PEs as well, why not? It's in Baltics, which is becoming popular globally, but haven't heard here in Baltics like that suggestions or proposals. So new trends it might be coming, but we need to somehow to push that market to attract more capital, and as many instruments, either it's from equity side or from fixed income, helps the market itself. So I hope that this trend will continue, and in 2030 we will hear about new instruments in the markets, either it's in public or it's in private.
Yeah. Endriko, how is your portfolio looking on that year? What is the split?
I think we have more Europe, including more Baltics. And I think in 5 years, my dream is that we will get that holy grail emerging market status. By then becoming also the target for some index funds, then I hope that the reconstruction of Ukraine will be in full swing by then, which also supports some comeback in more general terms for European equity markets in general, including Eastern Europe in particular.
And Rokas, what is the assets under management for this development, the accelerator fund?
I hope we will be fully invested. It will be 100 million or more. I hope after this IPO drought globally and in the Baltics, this is a new wave is coming, and we will have a few very decent listings. And I hope that our people will be able to, to buy like Ignitis or other Baltic listed stocks through Revolut or Robinhood in their apps.
Yeah. I hope each and every one of you have also experienced now this dream and thought about it. Let's give a big round of applause to the gents here. Thank you.
Thank you.
Thanks.